Hello and welcome. You're watching Closing Trades here on ET Now, and we are close to record highs as we speak. The Nifty is surging past 26,200, at least at this point. We're around 0.6% higher in trade. In terms of what's leading the charge, it's Eicher Motors, the Bajaj twins, and well, the big boy, Reliance, has come to the party. 1.8% higher on a Reliance Industries. That's what's really driving the Nifty 50 index higher. In terms of sectors, well, the defense index, the Fin Nifty, the oil and gas index are doing fairly well for themselves, followed by energy, and thereafter come some of the larger ones, auto, IT, FMCG, all of them with milder gains compared to some of the others which I just mentioned. In terms of the contributors, that's extremely important. Reliance and HDFC Bank have taken center stage, at least on the Nifty. They both have contributed a combined 80 plus points to the Nifty rally today, and that's what's driving the index higher. 1.3% higher on an HDFC Bank. That one is standing out. And Reliance Industries, I did mention, 1.8% higher on a Reliance Industries. Even in terms of the losers, far and few, and that's what's really carrying the index higher. You look at the advance decline on the Nifty 50, it's 38 advances for just 12 declines, and that's what's driving the index higher, all positive. No pressure whatsoever from IT, 0.25% higher, and banks, of course, very supportive, very similar quarter percentage point higher on the Nifty banking index as well. Kunal, we're closer to life highs. You predicted a life high on the 21st. Will you reverse that and call it the 30th?
No, I think let's wait for maybe another day, another 1.5 hours. But yeah, it's getting a little bit more closer.
Yeah.
And it's good to see the support of many large cap names. We were discussing this in the morning that if large cap starts to participate, then I think the markets will find its mojo back. It was the first 1 hour, first 1.5 hour, a little tricky for the markets because you had dearth of large cap names. But then I think after that initial bout of selling, you saw the index recover quite well. We managed to perk up back again about the 26,000 mark, 26,100 levels initially, and then now we've scaled past about 26,200 levels. Good to see the likes of Bajaj Finance, etc., making a very strong comeback. The stocks coming back into their short-term swing breakouts. So all in all, I think it's a healthy sign for the index. Just I think 50-60 points away from the lifetime high levels for the Nifty.
Well, two heavyweights, Kunal, carrying the index today. I spoke about that. 80 points contributed by HDFC Bank and Reliance Industries. Those two are likely the chunkiest reason why the index has moved. Because when you're looking at broader markets, you're not seeing the breadth as favorable. But on the Nifty 51, the breadth is favorable, so the negative contributors are lower. And then you have these two twins, or rather not the twins, but these two heavyweights really carrying the index higher. Give us your take on both of these.
Yeah, it's been one of the reasons why the Nifty has performed so well. You have support of these large cap names time and again. I think Reliance has done fabulously well. It's been a silent performer. I'll call it silent because the contribution the stock has shown in this last, if you look at this from the 24,500 mark for the Nifty, Reliance was not one of the first movers. The stock participated a little late when the Nifty managed to break past about 25,000 mark, where the confidence starts to be a little bit more better. But I think in this leg, Reliance has participated quite well. It's back again above that 1,500 mark, very close towards the previous highs of 1,600 plus levels. So I believe that with this momentum on its side, the stock finding a clear uptrend, breakouts, the stock will be due for a breakout closer to the life high levels over the near term. HDFC Bank could be a big surprise because we were discussing this that the private sector banking names have not participated in the same gusto. But I think with HDFC Bank trying to make a comeback today, we are also seeing signs that ICICI Bank is trying to make a good comeback for itself. I think these are very healthy signals where this could bode well, not just for the bank Nifty overall, but for the benchmark Nifty as well.
So what are your picks in this market, Kunal?
So I'll go with heavyweight names. L&T is the first stock which I would suggest as a buy. The stock looking attractive at current levels of 4,020 thereabouts. So would look out for targets in the range of 4150 for L&T. Stop loss could be kept at 3,970. The second would be a buy on Mazagon Dock. Many of the defense stocks and the shipbuilders, these stocks are making a very good comeback. So would be bullish on Mazagon Dock for a target of 3,000. Stop loss at 2,740.
Well, so those are two stocks for you to likely pull a trade. But let's go across. We have Anurag Joshi, SBI, with regard to an ET Now exclusive that he's bringing us. The largest lender, which is State Bank of India, and French asset manager Amundi have started groundwork for a mutual fund IPO. ET Now learns that the RHP has been floated, or rather the RFP has been floated to appoint as many as 8 bankers for the planned IPO of SBI Mutual Fund or SBI Fund Management. Anurag Joshi brings us all of the details on this one.
The country's biggest lender, State Bank of India, and French money manager Amundi have started preparations for the listing of SBI Funds Management that operates SBI Mutual Fund, the country's biggest asset management firm. SBI and Amundi have issued a request for proposal seeking appointment of as many as 8 banks to manage the equity sale of SBI Funds Management. SBI Funds Management is a joint venture of State Bank of India and Amundi, and SBI is owning about 62% equity stake, while Amundi owns about closer to 36% equity stake in the venture. And the early indications, according to sources, on the likely valuation for SBI funds is around $12 billion. SBI and Amundi are looking to conclude hiring of the investment bankers, the lead managers, book running lead managers for the issue by the end of December, and they're aiming to file the draft red herring prospectus in the January-March period. On November 6th, SBI and Amundi had flagged plans to offload a total of 10% equity stake through the planned IPO. SBI is planning to divest about 32 million shares, and that's 6.3% equity stake in the company, and Amundi will sell 18.8 million shares. That's 3.7% equity stake. SBI Mutual Fund manages about 12 trillion rupees of assets, making it the country's biggest asset management company.
Okay, thank you for that, for getting us that exclusive, Anurag. Of course, SBI, let's pull up that stock. Let's see what that one is doing on the back of this possible IPO which could come through. Definitely impacts the SBI counter because it will be the largest AMC in the country which comes up with an IPO. But what we'll do is we'll slip into a very short break. On the other side, we'll continue to go stock specific, talk about what are the themes that are playing out and what are the stocks that are buzzing. Stay with us here on ET Now. Welcome back. Thanks for staying with us. Cummins India is the one in focus on the back of the City Note management meet coming in, and it's one of the top picks for them within the industrials pack in India. Strong infra projects, data center demand continue to aid growth for the company. Kanishka here with that note, setting up the context as to why Cummins is up 3%. Kanishka.
Well, yes, let's talk about Cummins India. This is after Citi, the brokerage firm, conducted an infra tour, and Citi remains upbeat on Cummins India, calling it one of the top picks in the industrial space. It says that the management sounded very confident on the demand trends as far as Cummins India's management is concerned. The power gen demand remains steady, supported by real estate, construction, and infra activity. The data center segment, for that matter, that is also very strong, driven mainly by co-location partners through hyperscale orders that may still be lumpy. Other than that, the weakness is seen in industrial activity during the second quarter of FY26. That is being viewed as very temporary, like we saw in the earnings this time around, with recovery visibility in railways, defense, and marine segments. Now, Cummins is also expanding its distribution reach and expects a bigger customer wallet share in the post-CBCP4 regulatory area. So, yes, Citi continues to back its overweight stance at Cummins India and underweight on ABB in the pair trade data.
Okay, Kanishka, thanks for that. Kunal, your view with regard to Cummins India, and also if I can throw in an ABB, give us a view on that one as well.
Yeah, I think Cummins has done reasonably well. I remember, I think, tracking the stock just about a couple of weeks back when the stock had gone to a breakout above 4,000 levels. That was the time when the stock was going to a consolidation, but now it's moved up quite well from 4,000 to 4,400 thereabouts. In the same breath, I think ABB has actually underperformed. The stock is still struggling. at the 5,000 mark. I think 5,150 is where the stock is. Just about a couple of days back, the stock was almost at 4,800, 4,900, kind of a zone. So it's recovered, mildly in the last few days. But then the medium-term charts for ABB are complete contrast to what we've seen for Cummins. Cummins is a more stronger name. The stock has done exceptionally well, and it looks like that even at current levels, the stock would continue to move up higher and show those leadership qualities.
Okay. All right. So, that's the take coming in on Cummins. Mayuresh Joshi at this point joining us, head equity at MarketSmith India. MarketSmith India. Mayuresh, hi. Good afternoon. Give us a sense within this play of cap goods, and as part of the capex cycle, power. Would ABB and Cummins be a good play, or would you go towards the pure power players like a Power Grid and Power Gencos, or would you go with the power financiers?
Afternoon, Harsh. No, I think looking at the landscape in terms of expectations of renewable, actually expected to hit 500 gigawatt as per the central government targets by 2032. I think if we are on that path, I think the expectations in terms of all three segments of the power ecosystem, whether they are generators, transmitters, or financiers, all probably come into play. And let's not forget the EPC players as well, because for all these elements to be put together, the EPC players, which are probably providing services to the power guys, are probably in the right areas as well. And therefore, I think from a generation perspective, our own sense is that if you're looking at PSUs within the entire basket, obviously, I think NTPC is expected to increase its fair share of solar energy as well as hybrid energy as well over the next few years. The capex is happening in the right direction, and therefore I think a large part of the expectation builds up in terms of both for NTPC and Power Grid as a transmitter, in terms of capex, in terms of the expectations in terms of capital expenditure to the capitalization trend. I think will continue on an elevated level. I think players like ABB, Cummins India obviously have a lot of other areas that they probably will benefit from as well. Storage units, storage centers, data center development. We've also got some area in terms of niche applications that have probably got in railways. And therefore, I think these ancillary players do come into picture as well. Financiers, again, I think should probably have a reasonable say going forward. But largely, it really depends in terms of the entire ecosystem and the way I think the power generation demand plus dynamics in terms of addition of power that probably happens. At this point of time, Harsh tempted from the PSU space, anybody holding NTPC Power Grid should hold on. Dividend yield becomes an added advantage. Generators, specifically companies like Tata Power on the private space, are probably looking better placed with expectations of resolutions happening on a couple of their plants, both in terms of tariffs and a part of their contingent liabilities going away, if any. Financiers well placed, dividend yield also remains strong. But again, financiers will be a longer term play. One can't play financiers from a short to medium term perspective.
But Mayuresh, sorry, but why do you say that? Because financiers are trading at nearly a one-time kind of book, maybe 1 or 2 years forward, but one-time book seems reasonable with the kind of dividend yield that they have.
No, so I think the perspective, Harsh, is pretty simple here. The logic that and the rationale that goes behind this, power projects are long gestation projects. Obviously, as financing starts coming in, you can't see the implied results come through on an immediate basis. If there are any execution delays that probably happen on a few projects that have probably got funded, or some element of cost overruns, I think that is where the inherent issue probably lies from an immediate short to medium term perspective. And therefore, the logic here is that it might be a little bit bumpy from a short to medium term perspective in terms of how numbers can play out. That one really looks at. I think consistency over a longer period of time be well pulled up over the next 4 to 5 years. No two ways. I think valuations are obviously in favor. And as I said, dividend yield for both these stocks probably look very, very attractive at this time.
What's your take on the power financiers, Kunal? PFC, REC, IREDA?
Yeah, these stocks have grossly underperformed, over the last many months. In fact, PFC, RSC have been languishing at their, 52-week lows as such for the last, I think, 4 to 5 months specifically. Now, there comes a point in the market where, eventually these stocks will also find their mojo back. The risk reward starts to look attractive. I sense that we are looking at a point where these stocks have come back to that kind of a territory where the risk reward starts to look attractive. In fact, over the last 3 4 quarters, 370, 75 thereabouts for PFC and closer to 385, 390 odd for RC. I think have been zones where the stocks have formed a near-term bottom and shown good rallies. But this time around, I would probably expect that with the markets doing fairly well, you might probably expect that these stocks may go into a turnaround mode, from current levels. So it's a matter of time. One has to be patient enough because it's difficult to anticipate when these stocks would form a bottom. They are, high beta in nature, and especially at times when the stocks find their momentum back again. So I think right now we are at a point where the stocks are not or nowhere close to their momentum zinc. But I think once the momentum is back, these stocks can move up very, very quickly. So risk reward wise, price wise, extremely attractive at current levels.
Okay. Mayuresh, we are very, very close to all-time highs. We're less than 50 points away from all-time highs now. Do you believe that the earnings cycle may turn out to be better in H2 than in H1? We also have put behind the Q2 earnings, not had a conversation with you since, and we've put behind all of the commentary that's come as part of Q2. What's your sense with regard to H2 and FY27 in terms of earnings? Could earnings actually surprise on the upside versus consensus?
So once again, I think H2 is expected to be relatively better because Q2 was resilient as far as earnings go for India Inc. And therefore, I think with GST rationalization expected to play its part, and the expectations in terms of personal income tax cuts also supporting the discretionary spending, government capex expected to continue remaining strong as we speak. Tax collections expected to remain resilient, and therefore I think both the fiscal and the current account deficits expected to remain in the trajectory that the government is expected to maintain. Liquidity remains strong. Corporate debt to GDP levels probably remain pretty resilient as well. And therefore, I think if you have a construct that in terms of consumption plus investments, both from the government side as well as private capex coming back, I think that is going to create an impetus in terms of the earnings cycle actually improving as we head into FY27. As we head into the next 2 quarters and end FY26, obviously GST rationalization, consumer discretionary spending, green shoots seen in private capex, and government capex continuing should support earnings. Where the belief, Harsh, was that we might actually grow in higher single digits. I think if we start growing in double digits, which seems to be a base case scenario now, and if that compounds in FY27, I think a large part of the street consensus is a 13-14% earnings growth. If you map that up in terms of the Nifty EPS as we exit FY27, the markets are then not looking very, very expensive. Obviously, I think they're a tad bit above mean averages. But again, I think the expectation in terms of India as a market where earnings will remain resilient. And if any, the resolution that happens on the US tariff fronts, where the expectations of a GDP hit was a foregone conclusion, I think if that gets retraced back with all these factors at play, I think you're probably going to see nominal GDP grow at a much faster rate, leading to the base case scenario for 13-14% earnings growth. So yeah, I think second half better, FY27 base case 13-14% earnings growth.
Okay. All right. What we'll do is we'll slip into a short break. But, we've taken a fundamental view on what happens or what the outlook is if the markets notch up and breach those all-time highs. I want a technical view as well. Kunal, we've seen 5 to 6 times 26K being a key hurdle. I'm going to ask Kunal this question on the other side of this break. Are we now convincingly above 26,000? And can we hit record highs very, very soon? On the other side of this break. Stay with us. Welcome back. Arpit Beriwal, Manager, Derivatives Analyst, Equity Research at Motilal Oswal Financial Services, also joining us at this point. Now, before I go to Arpit, we're around 75 points away now from life highs. But Kunal, really the golden question is that 26,000 was a key resistance. Do you believe that now we've brushed that off for good, or too early to say?
Yeah, I think we've brushed it off for good for the indices. Good support, from the larger cap names is what I would probably believe is a hallmark of this rally. And then look at it this way, Harsh, that the trade tariff thing is not yet settled, and for our markets to climb back to that life highs, irrespective of all of this going around, I think is still indicative of the strength of the internal strength. The numbers on the FII selling on the options, on the FNO side, on the cash side, it's not very, very encouraging in terms of the data point. But then to climb the wall of worries and still, continue to march up higher is probably a test of the litmus test of the strength of our markets. So I think in that sense, yes, 26,000 mark on the short term wise, I think something which should probably have, scaled past. The only, thing which you need to watch out for is that generally at the start of the expiry or a fresh expiry is where the markets, gain significant, signs of fresh trend. So if assuming that the end of the November expiry and the start of the December expiry, we trade above the 26,000 levels more or less, I think that will be a very strong confidence booster for the markets going into the calendar year end.
Arpit, would you say that 26,000 brushed off convincingly in your opinion?
Yeah, so very good afternoon to all. If we talk about overall the broader market and the particular indices, so Nifty was struggling from last almost 17 sessions to surpass 26,100 levels. And in yesterday's session, it gave a decisive close about 26,050. And today, slowly, steadily, the benchmark is all close to hit towards its previous all-time high levels. So look at the setup wise, definitely the base of the market has shifted higher. And earlier, the resistance was 26,050. That was likely to act as a support for Nifty. And our sense is that slowly, steadily, the Nifty can head towards 26,350 and then potentially 26,500 in coming sessions as heavyweights are participating well, likes of HDFC Bank, Reliance, Bharti. So definitely 26,050 will be the support level. On the upside, 26,277 and then eventually 26,500 positionally is on the cards for Nifty.
Okay. All right. Mayuresh, let me come to you. What are the sectors that you believe look good from a risk-reward standpoint, given the kind of earnings that have come out? Give us a sense as to what that pocket could be, which could be low-hanging and really easy to grab on.
So Harsh, I think domestic apparel makers, I think they probably are looking a tad bit better placed as we speak. So you've obviously seen better numbers come from V2 retail, similarly from Vishal Mega Mart. I think the sweet spot for these folks is that they're absolutely in the right areas where discretionary spending is expected to pick up quite significantly. They've got a good mix in terms of apparel, groceries, and FMCG as well. Their average consumer and the average spending that probably comes through is close to 300, 350 odd rupees. And therefore, I think as discretionary spending patterns move higher in tier 3, tier 4 cities, where a large part of that store count is, and where they're expanding that store count, specifically in the food belt that we're speaking, areas of UP, Bihar, Jharkhand as an example. I think there can be significant value addition that can probably happen to these local players like a Vishal or a V2 retail. The second element is obviously NBFCs. Our own sense is that with rate cuts that have probably happened, better placed NBFCs with better capital adequacy and expectations in both terms of better credit rating stand to gain quite significantly as we head into the second half. I think apart from consumer discretionary spending, consumer durable spending with GST rationalization and income tax cuts as a base case scenario expected to trend and tread higher over the next few quarters. And therefore, I think the shift in terms of an unorganized market to the organized players, I think is going to be very, very evident. And NBFCs will probably provide a base case scenario for all these consumer durable players directly or indirectly. And therefore, players like Shriram Finance, as an example, Chola Investment, Bajaj Finance, can benefit both in terms of the rate cut cycle, where borrowing costs go lower, NIM spreads expected to remain significantly higher, and expected to perform reasonably well. Obviously, I think select hospital stocks is something as a space that we've continued remaining very, very optimistic about. Again, GST rationalization helps them to a certain extent. The new visa changes that will probably happen, medical tourism still a very, very small component in terms of overall revenue. should start contributing. And again, I think the asset-light model that a lot of these hospital players are probably adopting will probably lead to better dynamics in terms of earnings going forward. So Apollo from the large cap names, Fortis, Max Healthcare should continue doing well. As a proxy to consumer discretionary, Harsh, I think select FMCG stocks should also do well. I think Nestle India had an outstanding set of numbers in Q2. I think the expectation that the management has put forth across their product segments, input costs expected to remain reasonably lower, makes us believe that volume-led value growth can actually come through for the sector as a whole. And therefore, the next 2 quarters are going to be interesting. We've already discussed a few capex themes, including power. And therefore, I think select capex themes should continue doing well as well. So in our opinion, I think earnings for these sectors should hold.
Right. Mayuresh, a quick follow-on. There's plenty of chatter about the possibility of hospitals actually being told to scale back on the kind of price increases that they've been undertaking, especially over the last few years. And now we've seen hospital stocks trade at slightly elevated multiples as well. So just trying to get a sense, is that a very real risk, or do you believe that that won't be much of a risk?
I think that component always stays, Harsh. But again, I think if you probably look at the macro dynamics for the sector as a whole, I think it's still a very, very underpenetrated sector. I think healthcare services in India seems to need to expand quite meaningfully across the length and breadth of the country. And that's what a lot of these hospital players are doing. Obviously, I think the capping in terms of rates that happen as they go deeper in tier 3, tier 4 towns is obviously going to be there. But they're again going to follow an asset-light model out there, which means not excessive leverage, play out with a local partner. And that is probably going to assist the absolute EBIT that they're probably expected to make. You look at the ratios, Harsh, it's still very very low compared to the density that we've probably got. Doctors that are servicing our overall population, the support staff, including nurses, the medical equipment that also is probably needed in terms of providing expertise as an assistant to the medical staff. So the ecosystem has to probably evolve. The government understands the need for all this. And therefore, even if the capping probably happens, I think there is significant amount of opportunities for the listed players that probably exist within the space itself.
Okay, all right. That's on hospitals, healthcare stocks. But let's shift focus. In the latest episode of the interview, Ayesha caught up with Aurobindo Pharma's management to understand what their capex plan is going to be going ahead and what the outlook on their injectables business is going to be like. Have a look at a slice of that conversation, and what we're going to do is we're going to take a break and then come back, continue conversation with our guests.
No, we will be doing normal capex, which will be somewhere around maybe around 150 to 200 million, which will be the sustenance capital, which we will be incurring it, and the one which we have already committed. See, you have to understand the fact that we are already having more than 30 plants, and some of the plants are, we are also increasing the capacity on every plant by about 10 to 15% like that. So that capex will be done. We will not go and then put a new capex and start the process as a whole. That is what we meant.
Right. Venu, injectables, they've become a major focus area for you all now. How large can this business get for Aurobindo, say, over the next 3 to 5 years?
I'm sure in 3 to 5 years, today we are somewhere around 500 plus. 3 to 5 years, we should be going around, I think, in my view, we should be crossing easily 800 to 800 plus.
Back with closing trades right here on ET Now, and we're coming to you live from the SBI Live studios and counting down to that all-time high on the Nifty. We're already holding a solid 26,242 on the Nifty futures. It's a solid 171-point move. The good thing, of course, is that you've got due support from the global markets as well. After the few odd aberrations that have played out in the last 10 odd trading sessions, the global markets have stabilized. Call it the Nvidia effect. But you've got even the European markets start off on a very solid note. It's a 1% move that you're seeing across the board. Asia had a very strong handoff with Japan closing in with almost a 1,300-point gain. And then, of course, quite a move coming in from Hong Kong, down a little bit for China. But periphery markets like Korea as well as Australia as well did well. The pre-market rates for the US futures, that's going to be important because remember, the Nvidia numbers came in the after hours, wherein the stock jumped up 4%, and it's quite reflective on the way the Nasdaq futures are right now, holding up a solid 400 points. So seems like a solid global market or US market reaction as well awaits us tonight. S&P futures higher by 1.25%, Dow futures 260 points higher. But talk about our markets, and the one leadership name that we've been talking about often has been M&M. And a lot of news flow, with regards to the investor presentation that the Mahindra Group shared with the aspirations and the outlooks for the conglomerate till FY30. Shrishti is here to highlight that. And then, of course, the kind of strategic moves that group companies like Mahindra Holidays has been making. They're expanding now into leisure hospitality with a new brand. So let me take it across to Shrishti first and get in a summary of what that investor presentation was all about.
Well, yes, Mahindra Group has come out with its Investor Day presentation where they have set ambitious target for across their listed entities and some of their unlisted growth gems as well. Firstly, with respect to the organic growth trajectory, the company is looking out for a growth in the range of 15 to 40% between FY26 and FY30, and that is seen to be on the higher side of 25% what the company has experienced in the last 5 years. But along with that, with respect to so many of their listed subsidiaries which have already been doing very great, the company has set very strong targets for that. Let's take them one by one. Firstly, with respect to their SUVs and LCVs, they aspire to be the world's fastest growing SUV brand. It's a 8x growth is what they are penciling in by FY27 for the base of FY20. For Mahindra Tractors, 3x growth is what they are looking out for till FY27 versus FY20. And for Mahindra Finance, they aspire to be the most trusted financial services provider for Bharat with a 5x growth. Tech M FY27 goals with a 15% EBIT margin to do better versus the peers is they are looking out for. And when it comes to Club Mahindra, it's a kind of a 3x growth what they're penciling in, but overall the keys are expected to expand drastically, especially some of their branded leisure and some of their newer offerings as well. And for the Mahindra Life Spaces, it's a 10,000 crores of total sales is what the company is looking out for as a target with a 14x growth. So that's about Mahindra's investor group presentation. Very strong targets that they have set for across the companies.
Right. And Snehi, tell us all about Mahindra Holidays and the fact that they're now expanding into leisure hospitality. What does that imply?
Well, yes, so one of the big announcements that we've heard from the M&M Investor Day is their announcement on Mahindra Holidays and Resorts, and in fact two important announcements when it comes to this stock, and that is keeping the stock afloat today. The first announcement is that they have announced a new foray into the luxury leisure hospitality segment, and now this segment of theirs, or this arm of theirs, is going to be known as Mahindra Signature Resorts. The rationale behind doing this is they want to diversify their portfolio, and they believe that this could add some scale to their existing portfolio, so that's a positive for Mahindra Holidays. The company is going to be making an initial investment of 1,000 crore rupees to get things started for the capex and for the setting up of the initial stage of the business, and the leisure business is going to be set up within their wholly owned subsidiary called Mahindra Hotels and Residences India Limited. Now on the back of this, Mahindra Signature Resorts has come out with a guidance that they are targeting 2,000 keys or 2,000 rooms by FY30. So that's an ambitious target set by this new leisure arm of theirs. And with this launch, Mahindra Holidays and Resorts is now going to be following a two-pronged strategy for growth. One is going to be on their existing resort group, and now the other one is going to be on their leisure business. Now coming to the second announcement that talks about their existing group, they've launched Keystone, which is a privileged access program for their members with flexible membership and benefits like concierge services among others. They've announced premiumization of the entire resort portfolio, so that is a big positive coming in for Mahindra Holidays. They've announced rebranding of Club Mahindra as Club M, and this inventory they've targeted to reach 10,000 keys by FY30. So these are the two major announcements from the Mahindra Holidays group as well.
Seeing you mentioned that Mahindra Holidays is foraying into leisure hospitality. How is that? How does that significantly change from their current business that they do?
Absolutely. So if you take a look at Mahindra Holidays' current business, it is more about growth in terms of the locations they are in. That has been their strategy so far, that they want to cater to the mid to slightly lower luxury segment, and they want to focus on the number of outlets they have. While that strategy continues for the group company, now their focus on this talks about how families want to connect offline. They want to connect in a private location and want to have a upper luxury experience of a holiday or a travel. So that is the rationale behind this, and they also want to diversify their portfolio. Now if you take a look at some peer companies, the likes of Chalet, Ventive, all of them have been foraying into this ultra luxury travel segment. So this has come in line with peers, and it's a positive for the stock today.
Very, very positive. In fact, from the sub 6,000 keys, Aisha, this one is going to 10,000 keys. So you're going to see a very strong growth by FY30. And this has been one of the key reasons why Mahindra Holidays hasn't done, as a stock, hasn't done as well as some of its peers, because growth has been a challenge. Getting in new members has been a challenge. First, let me take a view from Arpit Beriwal. Arpit, on the charts, how is the Mahindra Holidays looking?
If we see overall the chart structure of Mahindra Holidays, if I look at the chart structure on the monthly time frame, the stock is forming lower high structure from last couple of months. However, we have seen good recovery on the weekly time frame in last couple of days from 305 levels to 330 levels. But looking at the overall chart setup, as 345 would be a major hurdle level. Any closing of 345 will definitely start the up move towards 360, 365 levels. So 345 would be a crucial hurdle level on closing basis, where we can see upside move towards 365, where on the downside support will be seen around 320 levels.
Right, okay, that's that on our Mahindra Holidays. Hold on to that thought, Arpit. We're going to take a very quick break. Come right back. We'll continue tracking markets. Well, back with closing trades right here on ET Now, and still in conversation with Mayuresh Joshi as well. Mayuresh, wanted to understand what is it that you're making of, some of the moves that some of these hospitality players are making. You've got Taj on one hand, or IHCL rather, which is now venturing into the wellness space with their latest acquisition. And here you have Mahindra Holidays, which is now getting into leisure hospitality.
Afternoon, Aisha. No, I think a lot of these players are foraying into the wellness category, and I think the wellness category is one category which is expected to grow at the fastest pace over the next few years, both backed by discretionary spending patterns which are expected to be significantly higher, and the need for probably having these breaks, specifically from an urban stressful lifestyle. Again, I think we obviously have been in discussions with a few players in the unlisted space. So I think the understanding that we are now getting for the sector as a whole, and this space in particular, I think this is one of the fastest growing and the hottest space as far as hospitality is concerned. Obviously, I think individual players are either acquiring organically a few players within the industry itself or expanding into the wellness category on their own. But generally, our own sense is that hotel stocks have a long runaway growth. I think the kind of dynamics that one can look at, similar to hospital stocks, I think the underpenetration is pretty stark. The unorganized market is pretty large. And as rationalization has probably happened, specifically for the hotel players, for room rates below 7,500, I think the competitive advantage probably moves back to the hotel stroke hospitality industry as a whole. So yeah, I think remain constructive. Lemon Tree, as an example, is something that we continue holding. Chalet is also a good proxy for the overall space. anybody holding Indian hotels should continue holding. A clear disclaimer: we continue holding Indian hotels in our global portfolios.
Right. Okay, Mayuresh, great to have you on the show. Thank you so much for your time today. Let's move on and let's get you an ET Now exclusive. And sources tell your channel that Zomato or Eternal will soon share customer data to restaurants. The food delivery company has also started seeking customer consent for the same. Anjali is here from our reporter's desk to highlight the same on what she's picking up from her sources.
It's been a major breakthrough for restaurants. Food aggregator platform starting with Zomato has agreed to share key customer data including the name, phone number and address with the restaurants. Now for this, Zomato has started collecting consent from the customers on whether they want to share this data or not. So for all the users with an updated Zomato app, the first order that you place, you will see a pop-up that will ask for your consent whether you want to share this data with the restaurants or not. Now restaurants have been asking for access to this data for a while from Zomato because all that they got till now was the name as well as key macro level data, but that was not enough, is why they had been asking food aggregator platforms to share more data about the customers. So the National Restaurants Association of India is the one that was in conversation with these food aggregators, and now they've had a breakthrough with Zomato doing this nationwide. They are also in talks with Swiggy on how this data sharing practice can be put into effect on that platform as well. Now they are still in discussion with Zomato to understand the exact methodology of how the data that Zomato is collecting will be shared with the restaurants as well. But for now, for restaurants who are looking at this data to optimize their offers, customize these offers for their key customers and also look at strengthening their loyalty programs, this is a major breakthrough for them as they have access to more data from the customers now.
Okay, that's an interesting one, that Eternal will be sharing customer data to restaurants directly right now. Eternal holding around that 306 level in trade. But let me welcome on board Sunny Agarwal as well from SBI Cap Securities. Sunny, hi, good to have you on the show. And well, back at all-time highs, or at least counting down to that level. What do you think, Sunny, should investors be doing right now? Are there any fresh allocations that you would be making? IT for a sector, for that matter, has now finally sprung up from the lows. Do you think part of the allocation could go there?
Yeah, good afternoon. Definitely, I think IT, which has been a big underperformer during the last 4 quarters, on the hope of that India-US trade deal, there is a likelihood that guidance in terms of growth outlook is likely to be revised upward, at least for FY 2027, not for third quarter. But that is something which can lead to an re-rating as far as the entire active pack is concerned. Anyway, we have seen there is a significant under ownership as far as IT sector is concerned. So we may see a positive rub-off effect of US-India trade deal on IT demand environment. Within that pack, what I feel is that the companies which are specifically working on ER&D space, so companies like LTTS, Coforge, or for that matter, Tata Tech or KPIT, which are working on niche technology work on the auto side. Those are the companies which can see upgrade in terms of growth outlook, and those companies should be on radar if somebody wants to add IT as the pack in their portfolio.
Okay, that's on IT. Kunal, let's revisit your call. You were the first one to spot it, that, you know, IT is coming out of this slumber and it has much, much higher headroom from these levels. Any individual stocks that you like from IT even now?
Yeah, I think from the larger cap names would still continue to be bullish on the likes of Infosys. So we did a relative strength study where we looked at the better performers and the ones which moved up higher or showed leadership qualities. So I think in that sense, yes, Tech Mahindra, rather HCL Tech stands out to be the strongest, from the large cap IT names, followed by the likes of Infosys, TCS, and Tech Mahindra to a larger extent. Wipro is still an underperformer. The stock is still trading below its key moving averages, even on the short-term charts. So I think that's where one should be looking out for. The mid-cap IT names, Persistent is undoubtedly one of the best performing name. The stock holding on recently to that 6,000 mark as a breakout. Coforge is also something which has been starting to show signs of a bullish momentum on the upside. The stock is holding on to its key short-term moving averages, and with the strength which is eventually going to come back into these IT names, you'd probably expect Coforge to also start to outperform for itself. There could be also a spate of short covering rally across few of the IT enabled services names. Look at Tata Elxsi, for example, Oracle Finance. These are the stocks which have been beaten down significantly over the last few months, and there seems to be a point where the risk reward would start to look attractive for these spaces as well.
Okay, quite a few names from within IT there. Arpit, what's your call on IT stocks? Any fresh trading ideas?
If you see overall, IT index has been very much selective. So last couple of days, you've seen good buying action across the IT stocks. But if you look at the particular mid-cap IT stocks, such as likes of Persistent, if you see the chart setup of Persistent, looking at the monthly setup, the stock has been a quite outperformer. So yesterday only it gave a range breakout on the weekly time frame of 6,200 levels, and I think slowly steadily the stock can head new life highs towards 6,600 and positioning 7,000. So Persistent would be a first pick. Second would be from the non-FNO space, that would be eClerx. So if you see the chart setup of eClerx, the stock is in clean uptrend on the monthly time frame, forming higher rise, higher low structure from last 7 to 8 months. The weekly time frame also it is trading over short-term moving averages. A good base is formed near 4,200, 4,300 levels. So I think slowly steadily the stock can head towards 5,000 and 5,250 plus. So looking at both the setup, eClerx and Persistent would be a preferred pick within the IT pack.
Okay. All right. So that's the take coming in on some of the IT counters. Sunny Agarwal, let me come to you. Now, in terms of hospitality, one stock which is standing out today is Mahindra Holidays, but some of the other hospitality counters have run up. And ITC Hotels, in fact, ran up and has now come off from those highs. Is there a tilt you have towards any of the hospitality counters? And is there a rationale for that? Give us a sense.
Yeah, definitely. I think hotel as a sector continue to look good despite of seasonally weaker quarter during the monsoon. We have seen most of the hotel companies have reported a decent set of number. And when we look forward to a seasonally stronger quarter, which is the December quarter, again backed by weddings as well as the travel, we expect the hotel company to deliver overall pack to deliver a healthy earning growth going forward. So demand continue to outstrip the supply. If I have to choose one of the stock or few stocks among the hotel pack, so Chalet Hotel is the one idea which we like at current market price, wherein we feel the fair value of the business is closer to 1,100 rupees. Again, driven by the 30% key addition over the period of next 2 years, and at the same time the similar magnitude of addition on the commercial portfolio side. So that is something which will drive the earning growth for Chalet Hotel. Lemon Tree, wherein most of its portfolio is undergoing basically refurbishing. So that is coming to an end, and as per the management, we have seen that post refurbishing, there is a likelihood that ARR may inch up by 10 to 15% in the refurbished hotels. So there in Lemon Tree, and in addition to that, a demerger of its asset-heavy business that will lead to a basically lean balance sheet going forward. So Lemon Tree, one can look at keeping in mind the price target of 180 to 190 over the period of next 12 months.
Just looking at the large caps, they're holding out quite well. NBCC, after that 3,000 crore rupee order from the Nagpur Municipal Corporation, that's looking good by 3%. Cummins, of course, is holding out well. And then, of course, you've got a Power India, IEX. These are all names which are looking smart. But Kunal, as the large caps begin to put on more weight, could that come at the cost of mid-cap underperformance by any chance?
Not really, Aisha, because in this leg, the mid caps have already done reasonably well. The index as such. Now, yes, the constituents of stocks, or rather the mix of stocks have been different. It's not the ones which were doing well the last year. They've done reasonably well. There have been new set of names, new set of stocks which have done exceptionally well. So I think one has to try and just about adjust to the current mix where the markets are going. And I also believe that it's a very good sign that the mid caps are not doing or not going into a gung-ho kind of a rally, because that means that the euphoria is nowhere set in for our markets. Even though the indices are perched at closer to the life high levels in terms of a breakout, and that also indicates that there should be more headroom for the indices to move up higher before you see some sort of exuberance creeping into the indices. So as of now, I think I would probably expect that it will be a point where there will be a balance between large caps and mid caps, but there will be a phase going forward once the market goes into more positive news flow across global indices, etc. I think once that happens, the mid caps will start to accelerate more than the large cap names.
Arpit, if I can come to you with regard to Natco, the stock is up 4.5%. Volume led.
If you look at the chart setup of Natco Pharma, so if you see the setup wise, definitely the stock has been underperformed for the last couple of weeks to months time frame. Looking at this chart setup on the monthly time frame, the chart is in formation of forming a double bottom pattern near around 800 levels. So I think look at the setup wise, confirmation will be seen around 888, 890 levels. A closing above 890 would definitely confirm the double bottom formation for an upside move towards 1000 levels, 1020 levels. So 890 would be a key level on the upside. A closing above that will definitely place the short-term bottom for this counter with key support around 830 for an upside move towards 950 and then 1000 positionally above 890 levels.
Okay, that's that right now. Let's take a look at the laggards as well. Asian Paints, it seems like that very steady recovery that it was holding at, and very sharp one at that. If we can just bring up the last 10-day chart or 15-day chart for Asian Paints. Today it softened a little bit. HCL Technologies is down, Unilever, Titan, SBI and Kotak as well are not really doing anything. Infosys too has flattened out. That's the case with a Wipro as well. But today, if you look at the leadership, that's clearly within Reliance, Bajaj Finance, that's been holding out well, and HDFC Bank. They are the ones which have contributed maximum to the move on the index today. Kunal, how much more for Reliance and HDFC Bank, given that they didn't quite participate up until now?
Yeah, I think both of these stocks, yes, as you rightly mentioned, has underperformed. Reliance, maybe the stock will come back towards its life high, 1620 thereabouts is the previous high for Reliance Industries. HDFC Bank, I still believe that for the stock to show signs of strength, it has to cross back about the previous highs of 1040-50 levels thereabout. The stock has time and again gone to a zone, where the stock had come back into a breakout closer to that 1000 levels. But then the manner in which the stock has slipped back again and come back into a consolidation band, I think is a concern for the stock in the near term. But I think if Reliance breaks past over 1600 levels and if HDFC Bank crosses the 1040 mark, this could probably be a very strong indication for the entire sector, respective sectors, because for example, private sector banking names have been laggards, I think, except for the likes of Axis Bank, which has been a class outperformer from the private sector banking names. Most of the other stocks in the last 2-month, 3-month perspective have underperformed. So maybe I think there could be a time where these stocks may act as leaders for their respective sectors. Case in point, what happened to the PSU banking names once SBI managed to break that 825, 830 barrier. That led to a very strong, quite a substantial rally for most of the other stocks within the PSU banking names.
Okay, that's that on the leadership names within the Nifty. We'll take a very quick break. We'll continue our discussion with our experts on the panel, but also hear it out from the management of the new listing today. That's Fujiyama Power, Pawan Kumar Garg, the chairman, and Yokesh Dua, the CEO.
एक्चुअली हमने शुरुआत नॉर्थ से ही किया था, तो इसलिए नॉर्थ ज़्यादा स्ट्रॉन्ग हैं, लेकिन अभी हम साउथ में एक्सपेंड करना शुरू कर चुके हैं. केरला, तमिलनाडु हमारा अच्छा अभी हो गया है, और 3 स्टेट और साउथ के और 3 ईस्ट के हम फर्दर पेनिट्रेट कर रहे हैं. तो हॉरिजॉन्टली तो ये एरिया वाइज हो गया. वर्टिकली जैसे हम लोग नंबर ऑफ डिस्ट्रीब्यूटर और नंबर ऑफ चैनल पार्टनर्स भी ऐड कर रहे हैं, हम उम्मीद करते हैं कि 1 से 1.5 साल के अंदर हम पैन इंडिया ठीक ठाक कवर कर लेंगे.
और जो रतलाम का एक्सपेंशन है इसमें, वो भी हमारा इसी का एक हिस्सा है, क्योंकि जैसे जैसे हम साउथ में, सेंटर में, वेस्ट में एक्सपेंशन करेंगे, तो वहाँ से जो हमारी ट्रांसपोर्टेशन कॉस्ट है वो रिड्यूस होने वाली है आने वाले टाइम में. ये डेफिनेटली एक कॉम्प्लीमेंट्री रोल प्ले करेगा, क्योंकि जैसे जैसे ईवी का चलन बढ़ रहा है तो पावर की रिक्वायरमेंट बढ़ रही है, और जैसे जैसे पावर की रिक्वायरमेंट बढ़ रही है तो वैसे वैसे सोलर के ऊपर डिपेंडेंसी कहीं ना कहीं बढ़ेगी. तो अगर इस मायने में देखें तो हम डेफिनेटली मतलब एक दूसरे के कॉम्प्लीमेंट्री है.
Welcome back. You're watching Closing Trades here on ET. Now, let's go across. Sunny Agarwal. Sunny, I want to get a sense from you. Chemical stocks, they've been laggards for a long period of time now. You believe that, and every time we close an earnings season, we seem to get a feel that they're 2 quarters away from a recovery, from a comeback. Where are we at this point where the chemical cycle is concerned, according to you?
Yeah, again, chemical as the entire pack continue to struggle from an weak pricing environment, and unfortunately, that is something which continue to remain an overhang for most of the chemical companies. And again, the thesis remain the same that because of the dumping from China, and at the same time, weaker global demand environment, the pricing environment on a weaker footing, and that is the reason most of the chemical companies are not reporting a very exciting earnings number. So I think again a work in progress as far as the entire chemical pack is concerned, but few chemical names which are looking good despite of weaker numbers. So one of the company which we like is the PI industry on agrochemical side. So that is the one name among the agrochemical. On the other hand, Vinati Organic, although there is a pricing pressure, but because of the new commissioning of capacity and under its subsidiary Viral Organic, volume growth is something which will ensure that at least 20-25% growth over the period of next 2 years, that can continue. And in addition to that, Acutaas Chemical is the one company which has reported a very solid set of number in Q2. So we believe that should continue. And Previous Speciality is the one stock which we like among the chemical pack.
Right, okay, that's the take coming in on the chemical space right now. Eicher, of course, is holding out very smart today. The auto pack, of course, has been quite, buoyant in that sense. But Arpit, come in on the charts here. Two-wheelers as well as, the passenger vehicles, clear dominance by Eicher as well as M&M. But what about the others?
If you see overall the auto index has been quite resilient post the GST rate cut. And if you see, though from last couple of weeks, the index is consolidating from the weekly time frame, but there are a few pockets which are totally outperforming. And within that, one of the top pick would be Eicher Motors. So technically, on the monthly time frame, the structure is intact of formation of higher highs. On weekly scale, almost from the last 6 to 7 weeks, it was consolidating in a tight band between 6,800 to 7,100. But today, looking at the setup wise, definitely the stock is given a range breakout above 7,100 levels. And looking from here on, we can see good upside towards 7,350, 7,500 positionally with key support around 6,800. Along with that, second would be from the auto pack would be M&M. So if you look at the chart sector, M&M, in spite of the auto index was consolidating, M&M is a strong uptrend on the monthly time frame. The structure of higher lows is intact from last 7 months, and slowly the stock is heading towards new life high territory. So I think M&M and Eicher looks good. M&M gets to be steady, they can head towards 4,000 plus levels in next 1 to 2 time frames, a month time frame, with key support around 35-50 minutes.
Okay. And what about Sunny? Where do you sit with regard to two-wheelers? Hero gave some very strong commentary, and some of the and the stock has actually stood out after that. Let's pull up the 5-day chart on Hero, and you'll see what I'm inferring. What's the sense like on a Hero and maybe a TVS, a Bajaj Auto, that set of stocks? Is there a preference you have?
Yeah, so coming to two-wheeler pack, again, our preferred bet continue to remain TVS Motor on the back of very robust volume growth, which we are seeing across all the product portfolio. So we believe the fair value of TVS Motor is 3,800, 3,900 with an investment horizon of 6 to 12 months. Hero MotoCorp, we have seen at least the slide in the market share is something which has been arrested, and at the same time, valuations are one of the cheapest in the entire two-wheeler pack. So there is some value buying which we are seeing in Hero Moto post this recent development on volume on the stability on the market share front. So Hero again being a turnaround story in case the company is able to sustain its volume growth number over the period of next 2-3 months, then I think the re-rating should continue purely on the back of relatively cheaper valuation as compared to other peers like TVS or Eicher.
Okay, that's the take coming in on the entire two-wheeler space. Of course, today, taking a look at the losers, this Biocon down about 3.5%. Pretty much seems like it's undone all of the gains that it made last week. Auto Pharma is down, Delivery is down, IIFL and Idea is your rank underperformer today. Almost a 5% downtick is what that stock is currently sitting on. There's, of course, IREDA as well. It's been a little bit of a choppy ride for the stock, not going anywhere. Mazgaon Dock That's up 2%. And then RVNL, which is holding up about almost 0.5%, that also has been a little choppy, so to speak. But Sunny, what happens to the erstwhile favorites, railways and defense? Do you think in this market momentum, there will be new leadership in terms of sectors which will emerge? And then what happens to these two sectors?
Yeah, coming to railway and defense, I think defense is relatively well placed as we speak, obviously on the back of very robust order book and likely execution over the period of next 2-3 years. So within defense pack, PSU companies like PEL, Mazgaon Dock, GRAC are very sitting on a robust order book. And at the same time, Bharat Dynamic, in fact, have reported a very good set of numbers this quarter. So all these companies will be reporting a decent set of earning growth over next 2-3 years. Among the railway pack, we have seen some headwind because of the lack of supply of wheel set for railway wagon manufacturer like Titagarh or Jupiter. But what we believe is that that is behind now, that overhang is behind, and in the second half we should see a very good recovery in terms of earning growth. So Titagarh Rail is the one stop which we are recommending to our clients among the railway wagon pack. Railway EPC, I think again FY26 is likely to be a muted year in terms of execution, and what we are hearing is that margin pressure is something which is likely to prevail in the railway EPC pack because of the increase in competitive intensity. So railway EPC we would like to avoid at a current juncture.
Railways at the current juncture, or rather railway stocks at the current juncture. Sunny, Arpit, thank you so much for coming in and speaking with us, giving us that perspective. We'll let you go on that note. And with that, we're closing the week off. Snehi's on the other side of this screen, giving us a quick take with regard to what's happened through the week. Snehi.
Well, yes, Harsh, so one more day left, but so far it looks like we've had a good week and another consecutive good day for the market, a 0.5% uptick coming in. It's been a good Sensex expiry for us today. The market has shaped up well because remember, at one point of the day, we were as close as 60 points away from the Nifty all-time high level. We've receded, yes, slightly from those levels, but now we're sub the 26,200 mark. Nothing to complain about, a 0.5% uptick on the Sensex, on the Nifty. The broader end of the market has not done anything at all. Mid caps and small caps were both flat. You have the advanced decline ratio that was slightly skewed towards the favor of the declines. But if you take a look at some winners and losers from the Nifty group of stocks, Eicher Motors up 3.5%, solid move from Eicher. Bajaj Finserv, Bajaj Finance, Tech Mahindra, HDFC Bank did well. On the flip side, some pressure on Asian Paints, HCL Tech, Titan and Apollo Hospital. So sectorally, it was the day of the auto stocks that did well, about 0.5% uptick over there, with Eicher, Hero Motor, Bajaj Auto, Ashok Leyland, all of them doing well. Well, yes, all eyes were on that M&M investor day, and that group guidance that they've given sounds positive. Some of the M&M group companies, particularly Mahindra Holidays, were in focus on the back of some new announcements. Nifty Energy, Bank, FMCG and IT. You have all of these sectors that didn't do all that much, ended pretty flat. But on the flip side, you have names like Realty, Pharma, PSU Banks and Nifty Media. Nifty PSU Banks was lower by about 1% in trade. So you had names like PSB, UCO Bank, Maharashtra Bank, Central Bank, all of them seeing cuts of about 1.5% to 2.5% each, and the entire PSU Bank sector has closed in the red. In terms of some individual gainers and movers, yet another good day for Jayaprakash Power. That stock was up 6.5%. M&M Finance was up 5%. Netweb Tech, Natco, IEX, Radico, Eris Life Sciences, all of these stocks did very well. On the flip side, some pressure on names like Sun TV, Intellect Design, Aditya Birla Lifestyle Brands, Hyundai Motors, Biocon, Schneider and City Union Bank. These are some of the top Nifty 500 losers. So that is how we're wrapping up for the day. Overall, very solid BSE Sensex expiry day for us. So 0.5% uptick on the Nifty and Sensex. It looks like we've ended slightly below the 26,200 mark, but we'll give that rate some time to settle. Meanwhile, it's back to you in the studio.
Okay, that's that on the Nifty. Good finish there, 0.5% higher. Kunal, looking at how the US futures are, what are we staring at tomorrow for our markets?
Hopefully that conquering of the new high. Last time I think we were at the new highs of 26,277 was on Friday, 26 September. So that's why one of the reasons why I would believe that maybe tomorrow I think would be a day where the index can scale past about the life highs.
Finally, we'll have a good Friday, right?
Yeah, finally, a much needed one.
And psychologically, I mean, to think of it less than 100 points away from that mark. But I guess the fact that we've tested it time and again and fallen, I guess it's quite critical to breach that level, right?
Yeah, it's very critical to breach that level. 26,000 is now becoming a good floor or a support for the index. Yesterday and today, the only similarity from the data point is that yesterday there was a very good amount of option writing, put writing at 25,900 strikes and 26,000 strikes. Today, those strikes have raised up higher. So the bar is now higher for the index. We are looking at 26,100 and 26,200. Very important strikes where you've seen an incrementally higher amount of put writing, which means market traders are getting a lot more confident that we are looking at a point where the index will scale past about the life highs, and the support for the index has moved up higher from 25,800 thereabouts to now even 26,100 for the index.
All right. Okay, we leave it at that. Thank you so much, Kunal, for coming in and speaking with us. Kunal, sorry, last question. Do you still believe tomorrow we breach all-time highs?
Yeah, tomorrow.
1:30 p.m.
That's a wager there.
So we're gonna have a rundown on the screen tomorrow. A timer of some. Put the pressure on Kunal, viewers. Anyway, with that, we're out of time on this edition of Closing Trades. From Aisha, myself, and everyone who puts this show together. Thanks so much for watching.